Okay, wow, things go fast. Okay, can somebody test the chat? Okay, there we go. As I do a transition. Okay, screen and cam, transition. Okay. Okay, so we have that up. We're getting ready to start. Lights, camera, action. Get started here in just a moment. All right, everybody. It is bottom of the hour. We are already live. And, I need to turn off that one. So I'm going to exit out of the Discord room. There we go. Hi, Ellie. Good to have you back. All right, voice is low. Okay, so we got desktop audio, which was the, let's just double check that one. Up the mic volume in OBS. Now, which mic? I got 3 different mics. I got the mic auxiliary. Auxiliary mic is maxed out. Desktop, I just increased the desktop audio. Is that better? No, they're all maxed out. Okay. Voice is good. Okay. Now let me just do one with the an alert to see if this is too loud. Let's see. Is that really loud? It's louder than the mic. Yeah, they're both coming from, okay, that desktop audio. Let me reduce it 50%. Okay, is that better? Okay, so now I know which one. Desktop audio is for what we're hearing, any alerts or order filled. Mic audio is maxed out right now. Mic and auxiliary. And then we also have a video capture device, which the volume is not even active on it. Okay. All right, let's see, let's go back to the PowerPoint. This one, okay. Good morning, everybody. Welcome to the marketinstitution.com. Please go out and register on the website if you haven't done so already. That way you can get all the alerts for the rest of this week, going into live trading room, mastering the charts review and recap, and a lot of special announcements coming out a little bit later. Okay. Let's get there. This is the live trading room recap and mastering the charts learning reinforcement section. Okay. Information contained in this presentation should not be construed as a recommendation or an offer to buy or sell any security or financial instrument. Additionally, information contained in this presentation does not imply the suitability of any investment strategy. We are not licensed brokers or investment advisors. All attendees to the presentation and purchasers of our content are encouraged to speak with a licensed representative of their choice regarding the appropriateness of investing, trading of any investment, or any trading strategy. We are using real-time market data and will be executing trades in a simulated account during presentation. No offer on our part respect to the sale or purchase of any securities is intended or implied, and nothing contained in here should be construed as a recommendation to take a position in the market. The intent of this information is for instructional and educational purposes only. Any fair use of third-party trademarks, logos does not imply an affiliation or a sponsorship. All trading involves high risk. Past performance is not indicative of future results, and we make no promises, guarantees, warranties, suggesting that any information shared will result in a profit and not in a loss. You agree to not hold us legally or financially responsible for any reason. All right, purpose of this room is of this class in this room right now is to recap the live trading room, do some trade reviews and assessment, answer the students' questions. Anything you may have, you can put in the chat, and I'm still getting used to a lot of things here. We will also be doing Mastering the Charts review and also taking a deeper dive into some techniques and some things to look for as we understand these market conditions a little bit better. Okay? All right, repeat. Practice, repeat makes perfect. Repetition is how we learn, and we must trust what we see on the price chart. So I'm going to encourage everybody. And one of the parts we have 3 parts to this class here. First part is to kind of recap the live trading room and also kind of monitor some trades that we might be in and be taking. Okay. The other part is taking a deeper dive into some of the lessons and some of the things that were learned from the live trading room. sometimes the topics only come to light and make more sense when we're in the middle of the trade or in the middle of what's going on in the marketplace, because the market conditions change and we need to be able to change with those market conditions. The third part of this is that we need to go and understand how to draw the 100 picture perfect past trade setups. And I would encourage you to post them in the Discord room. And I want to thank Steve. He already started doing that in the Discord. I'm going to bring that up. Okay, so we have our Discord trading room. And in this section, we have picture perfect past trades. Okay, now we did lose the data that we had compiled for a year now. Okay, that was a little snafu, a mistake, or whatever it was. Okay, and we lost that, so we need to rebuild it. So I want to thank Steve for putting a chart up there. Drew that 2 to 3 weeks ago. Forgot I even had the alert because I felt it was never coming back. Yeah. So great job. I mean, posting these picture perfect past trade setups, they really help a lot of people. But as we go through these, okay, contribute, be part of this. This not only helps you by drawing it out, but posting it accelerates your learning curve exponentially. Okay. Did we post the link for this in the? Yeah, we got it in the YouTube link. Thank you. Okay, so the repetition of doing this is what trains the eyes to see the picture much better. Okay. In forecasting the right side of the chart, we must understand how the left-hand side of the chart has specific characteristics and patterns, and those things repeat themselves. So create a folder for yourself and collect your picture perfect past trade setups, but also post them in the Discord room so I can see where you're at. I mean, the first couple of times that Steve posted, we made some little adjustments, okay? And also the other folks that have posted. We just made little tiny adjustments and then boom, they're off and running, okay? And often those little things will keep you on track. So good to go there. All right, let's do a little live trading room recap. We are in some of the zones right now. We were talking a lot about the attention on the bonds, yields, U.S. dollar, taking a quick look at, what's going on with that. The bond yields are still continue to rocket to the upside, okay? It's a 30-minute chart and still pushing higher, but the slope is getting a little more steep. So the steeper the slope, the more chance that we're going to get that pullback soon. So things are starting to set up. Since the bond Treasury yield, okay, 10-year yield has been climbing in such a manner like this, and let's go to hourly charts, okay? The equity indexes have been going lower, okay? So by watching this extreme and the slope up, okay, just as we're looking for bottoming patterns on the equity indexes, you can use the Fibonacci extensions and such to look for where we might find a turning price on the bond, the yield. Now, I say you have to use Fibonacci measurements on this simply because this is a 16-year high, okay? Never been up this high before in the history of what we have on the 10-year yield, okay, as far as what we're watching. Now, the dollar is also still pushing upwards, but high tight base can go higher. If the bonds and the yield, if the dollar and the yield keeps going higher, then we're going to expect the equity indexes to move a little bit lower, okay? I just want to be pointing these things out because right now we're expecting and we're seeing that some of our trade setups are in our prep screen zones, okay? So I'm gonna dabble with these using some micros.
Order filled.
Okay, I'm not using a lot. I'm just sticking to one because, and then once we do get a trend change and a move back up, okay, I will look to add on. Okay, so we have NASDAQ back in a zone. We have S&P in a zone. So I'm just going to take it across the board. I'll catch this one as it moves back to the upside. We're starting to see a small turn on the stocks. Okay, so I want to take an entry above 14,743. Okay, 14,743. I'll go long. I'll come back in there and place a stop loss at whatever the low is once that trade has triggered. On the S&P, NASDAQ, Dow's in a zone too. Beautiful entry right here. Okay, just buying at the market right now. Filled. And I'm keeping it to a minimum number of contracts and micros, and then just placing a stop at the low of the session. Okay, this is a proximal line entry on the equity indexes with the S&P, NASDAQ, Dow, and Russell. Okay, all have all of those have opened inside the prior session's range. For that reason, since they all opened, the opening price was inside the prior day's trading range, we are expecting a gap fill. That's the reason I'm taking the trades to the long side in a demand zone, even though the trend is down short term. Okay, so S&P, we're live on a trade, and I am still anticipating that gap fill. That's my target range. Okay, prices drop down now and hit the zone. It is also come into that 88.6% retracement over here. If we go below this, then the next level is down there about 42.31. Okay, 42.31. So as we continue to go through some of the other trades that we're looking at, gold is still manufacturing a turn. Okay, I have an entry to go long gold above 1845, 44-ish coming in, so I'm going to move that up to 45, right where I have my dotted line. When we go back out to the daily chart, it's going to be bumpy here, but I got to manage my risk, okay? I just can't jump into this daily zone and give it such a big stop loss. I look for the same picture to go long on that smaller time frame, okay, to take advantage of that move back up, okay? This will be the first move out of it, and then if this move is going to continue, it will also have to keep manufacturing a reversal pattern to start a new uptrend, okay? So we are looking for that initial impulse wave for gold coming out of this area, okay? But I'm managing my risks on a smaller time frame, back down to like around the 20-minute chart. I'm looking for that fresh accumulation of orders and then looking for permission to get into it, okay? And as we keep building on this, you'll start to see that anytime your higher time frame zones are dropping, or higher time frame charts, price, or dropping into demand zones or supply zones on a large time frame, okay, they need to manufacture a reversal pattern, a fresh accumulation of orders, which brings us over to the S&P, okay? And as we're watching the S&P at the moment, okay, we're in the trade. One of the big clues is seeing when a reversal pattern should be coming into play. This is a signal. Signal is when we make that lower low. Once you see that signal, price made a lower low than the prior low, okay, then you start from here and you look up and to the left, okay? Just training your eyes a little bit.
Order filled.
So when we look up and left, we see that there is a resistance level that has formed. Okay? With that resistance level, first, the signal making a lower low, okay? We then look up and find the resistance level, and we start to realize that the next entry to confirm that buyers have stepped in and creating the buy territory, okay, will be as price breaks above that 42.71 half, okay? So yes, this is a lot of turn, and the reason we want to wait a little bit longer on this, okay, I mean, I got in early, that's why I'm using micros and stops, is this pattern, as I draw it out, we've had some examples of this morning, okay? Notice where the sellers just kept bunching up and coming into the marketplace, okay? Most over on the left-hand side with current low pivot on the right-hand side, okay? So when we see this particular price pattern, I mean, they're good for momentum trades if you can catch the bottom, okay? But very often it's a little tricky to get into these ones down here, okay? A little tricky. As you can see, I'm getting, taking a little heat on the trade. Okay, that trade's still set up, nothing triggered on it. Yeah, it did get triggered on the Dow. And price going a little deeper. 234. If I'm stopped out, I'll get back in when price comes back through that proximal line. Russell, we got 4 contracts on the Russell, on micros. Okay, I may end up getting stopped out down here. At 1740, if I am, I'll look to still re-enter about that 1744. As we went down to a tick chart, found that a little bit earlier, okay? So based on information we collected in the pre-market, I am anticipating a gap fill. So I'm using a couple of micros to participate in that, keeping my position small and managing my risk tightly. If things are going to turn, we're going to need to see some help on the dollar and the yield at this point. We're not getting any of that such help at the moment, okay? Dollar continuing to move up and yield going up, okay? There's going to be another rate increase, and it might come out of the blue when it does it, okay? Now, something to keep in mind is that not every time a rate increase did the equity indexes drop, okay? During 1998, move up to 2000, okay, the market had several rate increases during that time. There was volatility around the rate increase in the FOMC meeting, of course, okay, a lot of volatility. But at one point in time, the rate increases became good for the equities instead of being bad for the equities. Right now, in these market conditions, the rate increase, good for the dollar, shooting up, okay, but the equity index is going down. What we're going to be paying close attention to going forward is when that scenario changes. When a rate increase becomes good for the market versus a rate increase being bad for the market. That'll be the dilemma that people will start talking about, saying, I don't know what's going on. Well, when that starts to happen, that is when the market is starting to change, okay? So as I'm monitoring both sides of this, watching the bonds, bond in the 10-year yields, and watching the dollar, okay, it is putting pressure on the trades that I took to go long, okay? And we still have our wheat trade that's working out quite nicely. Oh, here comes soybean meal coming back up, okay? Had our 3 touches. Price popped up, shot back down. We'll be looking for a re-entry on this one, 371.10. Good to go. Okay. Now, one of the things that you're seeing me do is when I have a setup and everything is right, I just execute the trade. Okay. It's just become, take the trade or move on. Okay. Now, to get to that point, you may have to use the simulator for a period of time till you're comfortable executing trades as you see them based on your research, okay? Based on the information that you've collected, the picture on the price chart, okay? S&P is one of those things here, okay? So S&P, we're looking to take the breakout, 42.71, okay? Which I can set that trade up ahead of time, okay? Or I can wait. Right now, I know my entry is up here. I might have another trade that I can look at to participate in earlier, okay? All right, we're seeing NASDAQ is still pulling back. Okay, we do have another zone, 14,961, 14,671. As we start anticipating a change in trend, okay? As we anticipate a change in trend, we are going to look to use our structural pivot points and just take a quick swing. So the signal for looking or anticipating a change in trend is when we make that lower low. When you see the pivot points making lower low like this, this is not a trade, it's just a signal, okay? And as I'm watching price, looks like it wants to make another lower low, okay? That will be the signal to start looking up and left. Now, what am I looking for when I go up and left? Well, I'm looking for anywhere I can map together those 3 touches. Okay, we got this area up above, and I can capture the 3 touches like that. That becomes a resistance area, okay? Sellers kept stepping in at that price point. You can continue higher looking for the same information. We're looking for where do we have resistance, okay? And on the tick chart, not much, okay? So this is our first place. We have 3 touches, okay? We just made a lower low, which is our signal to start looking up and left and looking for resistance. Since I don't have a solid, good resistance area where I can connect 3 points, the buy territory has not been manufactured. Not enough buyers coming in. So price may continue to drift down until we have that area of resistance. Minimum 3 touches, okay? As a odds enhancer, we like to watch and see what side of the fence are the bank indexes on. Right now, they're still bearish, okay? On a 5-minute chart, I'm just watching for when the banks and institutions start bringing in hedge money, okay? Or if they're more fearful, okay? We've got the VIX, okay? The VIX is moving, 1-day volatility index, is above the moving average, BKX below the moving average. That is the right market conditions for the market to continue lower, not higher, okay? Now, if you want to get away from more of the short-term trading, you would just adjust your time frames and then wait for these two to be inverse of each other for your potential trend, okay? Let's see, what do we have? We have Russell, Dow, S&P. The soybean meal, I just set that trade up. I want to come back out and look at wheat. Might be looking to take a profit on wheat. Let's go. Yeah, so a good picture here. So the other day, we saw that big drop, and then we saw that consolidation on a small time frame, which found some more sellers, broke down, and then we had the right picture on a small time frame for this to enter that. Okay, WZ23. It got a nice move to the upside, a breakout point. Okay, let's go down to just maybe a 10-minute chart. Yeah, there we go. I probably went to a smaller time frame chart because I don't see all the three touches in here just to get at this magnification. Okay. But the same story applies. I do want to note a subtle difference because we talked about the resistance touches of the resistance when they were on the left-hand side, and the low pivot was on the right. This is a different scenario. The three touches of resistance are more on the right-hand side and the low pivot point on the left-hand side. That scenario produces a longer running trade. So as a lesson here, going through this, the structures that are made from identifying the buy territories, sell territories, support and resistance, leave some clues as to the duration of the trade to participate in, okay? So we'll save that for a more deeper, in-depth lesson coming up, okay? What do we got going on the equity indexes? Okay, S&P is still holding around. Let's verify another piece of information. We currently have 16 Dow stocks negative over 94 cents and nothing positive. Okay, we take the number of Dow 30 stocks that are greater than 94 cents negative or greater than 94 cents positive, and then net the results. Okay, right now we have 16 that are negative and 0 that are positive. Net results negative 16. Okay, multiply that by 2 and that would be 32. Cash market equals negative 32. Futures are a derivative. Okay, now the derivative market, you have to understand, derivatives, they only follow something, they never lead. Okay, so right now the cash market is negative 32. Okay, up here. The S&P futures are oversold. They're at negative 62, so they're about 30 points oversold, S&P futures, relative to cash. That's a good scenario, especially when futures are oversold, dropping into a demand zone. Okay, but we need an actual measurement to determine when futures are overbought and when they're oversold. Okay, we use the Dow Jones 30 index to get this calculation. The Dow is a price-weighted index, giving each product an equal weight. Okay? The S&P, NASDAQ, and Russell, their market caps they're based on market capitalization weighted index. Okay? So we had a few things that we're setting up here. Futures, 30 points oversold relative to cash. Price dropping into a prep screen zone. S&P daily chart is below the 200 moving average, but has hit the Fibonacci 88.6% retracement that we forecasted based on using daily candles, okay? As we're looking at IBM and Goldman Sachs, small time frame, okay? Their candles are starting to get smaller. IBM and Goldman Sachs are two very large market cap weighted stocks on the Dow and the S&P. All the Dow 30 stocks trade on the S&P 500. So we have that relationship. The Dow and the S&P are very closely correlated. Okay? So, but the S&P is a market capitalization weighted index, not a price weighted index. So the dynamics right now is that this environment that I'm expressing, and we're starting the lunchtime doldrums when people tend to step away from the market, okay? Our pre-market prep, where price gapped down inside the prior day's trading range at the open, also gives us an opportunity to look for the gap fill. So a lot of scenarios why I want to get the bottom of this move. Now I need a way to get into it, okay? I need to look on the smaller time frames and see if we are building a fresh accumulation of orders. What does that look like? Okay. So as we are identifying potentially a fresh accumulation of orders, okay, it's not confirmed until price takes out the sellers. Okay. Now, once price takes out those sellers, we will have a fresh buy territory. What remains to be seen right now is, are we going to use this level as resistance one more time? If price goes right through this, which it can when the three touches are on the left, low pivot on the right, okay, price can go right through this. To the left, we have a speed bump. And we have
Order
another
filled
picture right up in here. Wow, I'm glad everything turned green. Let's see, we got Russell, S&P, NASDAQ, Dow, and wheat, okay? So let's do this. MESZ 23. Wheat's already on there. YMZ 23. Oop. MYMZ 23. When you have Russell, M2KZ23. Okay, that's 4. What was the fifth one? NASDAQ, Russell. So we got NASDAQ, wheat, S&P. Oh, we got an MNQZ23. That's pretty good. What do we call that, Chris? Call that the salad. Okay. Green salad right now. Don't need any tomatoes right now. Okay. But right now, we were anticipating that turn in the market. As I'm describing this, I'm bringing us right back to the pre-market routine. Okay. Pre-market routine helped us assess the market conditions, may do this today, okay? There were structures, there were patterns, price gapping down inside the prior day's trading range, okay? And expectations of the gap fill. All of these are adding to and helping me evaluate the potential move back up, okay? Dropping down to the smaller time frames, we're finding a way to break into that, okay? Now, as we are we just started the lunchtime doldrums, and so far we have not had a pullback. See, if the scenario price breaks out here, then I'm not expecting a long-term run. I'm actually expecting price to come back down, okay, to make a double bottom. If the resistance level holds and we get a pullback, then the breakout pattern will have a much longer potential move back to the upside, okay? These structures, you want to learn more about these, we do have a Mastering the Charts course coming up. It's a 3-day course. Actually, we're going to start adjusting those down to 2 days, Saturday and Sunday, where we get a bulk of the learning in. It'll be intense. You'll have the recordings, and then we'll just jump right into the live trading room. There's a lot of changes as far as the products that we've been doing in the past, but this next Mastering the Charts course at the end of the month of October, and we encourage you to go sign up once it's ready, not this week, okay? Wait till the end of the week. We'll send out some announcements when you can start signing up for the subscription services, okay? We still need to settle out the Elite Trade and some of their subscriptions you already paid for. So give us a week to get that accounting in place and get you taken care of, especially if you've already paid. The reason I'm still here doing this is because I believe in taking care of the student first. I didn't bail on you or run away and say I need time to think. No, we're here to support you, okay? And that's important to everybody, okay? So looks like we're starting to use that as resistance. That's a good thing for us, okay? So we still have the breakout trade to come into play on this. What needs to form now for that breakout trade at 42.71.5 is we need a fresh leg base group of candles, okay? Now, if you look at this area right now, this buy territory, I'm going to copy this window and I'm going to bring it over to my larger time frame. Okay? When we start looking and manifesting a turn in the market, okay? Every new uptrend, okay, is going to start on the smallest time frame with a fresh accumulation of orders, okay? What does a fresh accumulation of orders look like? How is it built? Okay, well, once we make that lower low, that's our signal to start looking for it. Lower low took place, so excuse me, my nose itching. We made that lower low at this point, so all of that history right there was telling us what they're getting ready to do. If you're going to start to pick a bottom in the market, you need to have that fresh accumulation on that smallest time frame in play, okay? So that you can see it and see that they are stepping in to buy, okay? Now, it just so happens on a large time frame, we're dropping into that demand zone, the prep screen zone. Well, that's a good thing. But if that zone is too much risk and price was dropping pretty fast into this, then I need to wait and let this manifest a fresh accumulation of orders. Then I can get in, and let's just assume that I take the breakout trade and assume at this moment that this is going to be the low of the leg base, okay? So why I'm doing this is that when we take a measurement of that entry, and basically 42.61 would be the proximal line entry, if we go down to the smaller time frame like this, I can see the risk is $6, okay, or 6 points on taking a breakout trade as this is being manufactured, okay? When I look at the large time frame, I'm looking from 61 down to 45. I'm looking at about 17, 18 points versus 6 points. But the price patterns need to be the same. We need to see that the banks and the big players are stepping in, okay? As they're stepping in, they make the same price structures that we look at on a large time frame. we're just using the small time frame to navigate for that earliest turning point and the anticipated move back to the upside, okay? So along with this, we're starting to see that manufacturing and that turn in price now, yet it has not produced a trade, okay? I took my entry based off a proximal line entry on the large time frame. The small time frame is still manufacturing that turn. So using the smaller time frame at these turning points on a large time frame can help you gauge your risk. But again, you need to let it set up, okay? So if you're going to take the entry, we need a fresh leg base group of candles. Our entry would be 42.71.5, and our stop loss right now, 42.65 even, okay? That's what we have on the chart at this moment. Could price not go up and trigger the long and keep going down? Absolutely, okay? Our buy territory is confirmed once price breaks out above all these sellers. Because at this point, as we're describing this picture on the price chart, right in here is where we had multiple sellers or more sell tickets than buy tickets. And we still had some, okay? But down below, we have a lot more buy tickets. Okay, and you can just use the pivotal points to help describe where there are more buy tickets than sell tickets coming into the marketplace, okay? Now, what has to take place is that price takes out any of the sellers up here. That will be confirmation that this now is a buy territory, okay? So as we're watching the manufacturing of this, the large time frames, yep, you're in a zone, okay? And sometimes these 15, 20-minute candles can be a lot of risk, okay? So I'm going to add on to my position another micro, okay, as price goes above a 42.71.5. You guys with me so far? Yeah, I'm still getting used to the way all this works. Let me try this. Are you guys getting all of this? Switch back. Let me see the charts, not you. It's got some pretty cool stuff on here. It's just, you know, I got to learn it, okay? So I'll be working on that a lot. All right, so that trade is set up and working, and I just wanted to describe what was happening there. Okay, so we are still in all five. Let's see, open trades. They're all up slightly, not a lot. We got 4 micros on the Dow, 1 on the ES, 2 on the Russell, and 3 on the NQ, okay? Coming out to the NASDAQ, guess what we're doing right here? Price came into a zone, okay? 473, 756. So let's do the same thing. We go to the NASDAQ on a tick chart to see what is going on right in here. Are we building a fresh accumulation orders, or is this just a bounce? Okay. We got our signal. Once we had our signal, we look up and left, and we start looking for where we have multiple touches of resistance. Multiple meaning more than 3 or more. We have formed a leg base group of candles. and price is now breaking out. You could add on to that. I'm good with the three I have. 14,760. So signal, look for resistance. Once it breaks above that area, then we have, as it is right now, we have our buy territory established.
Order filled.
Buy territory has been established. Wow. You guys doing a happy dance? This looks pretty good, doesn't it? S&P, okay, your stop loss is a little further away on the chart, okay, but it's much less than having your stop at 42.45 on the large time frame. Now what just happened? We got breakout, it didn't follow through. Well, you have to test the speed bump. Okay, that's why we wait for the leg base group of candles, so we have a place to put our stop. Generally, your stops are going to be a little further away when you have the speed bump over on the left. Okay, so let's recognize the speed bump. Okay, there was no pocket of points. And now we should always be testing the speed bump. I mean, how many have ever been driving through a parking lot, okay, and you just kind of overlook the speed bump? So when you're driving through that, even though you have a nice breakout trade, you're driving through and then you hit that speed bump, it kind of shakes you up, right? It was a surprise. If you knew the speed bump was there, you would slow down, you would anticipate the speed bump coming into play, and then you would ease over the speed bump, okay? The speed bump was in play over here. Price needed to test that speed bump area, okay? After it tested, you could come back in and still take that. Now, if you were prepared for the speed bump, okay, you would anticipate that if you did take that breakout, that you have to expect a little bit of a pullback, okay? So it's not a surprise that we're getting a little pullback, okay? Especially if you just entered that trade. Your stop loss is in place at 42.65. You accepted the risk by getting into the trade. But if you had recognized a speed bump and you understand the personality is that you got to test that speed bump first if you want to stay with a trade where you don't have to worry so much about the that pullback or that little vibration right there. So this is a very good example and picture that we're seeing on the price chart, okay, about the speed bump to the left and then looking to enter the breakout, because sometimes we get a little ahead of ourselves in trying to get to the breakout without recognizing the speed bump, and then we need to test it, okay? Now, once it's tested, you could re-enter the trade at the same point where the breakout was, and then in some cases, you may have a new leg base formed where you can even take a smaller risk on the trade, okay? Right now, my stop loss is going to be right there about 42.65-ish, okay? Now, all of this is being manufactured right now because we anticipate the gap fill on the S&P, which we got an hour before we got it when the market was opening, okay? So, and we had price drop down into the prep screen zone. We're anticipating the gap fill. So I want to find are the buyers really coming in, okay? Boy, I need to shave or get some sun. I've been stuck in here. Hey, do we have that app to make you look better when you're doing these things? That filter? I'll have to put that on my wish list. Hi, Daphne. Daphne, do you recommend TradeStation platform versus TradingView chart? The pictures are going to be the same, okay? I use them both. depending on how you have things set up, I mean, you're going to get the same thing. TradingView, NinjaTrader, MetaTrader, okay, all of those are great platforms, and they kind of have the same. Basically, this is a white label workspace, okay? They have the same tools, okay? I like the functionality. You can size the chart, increase, decrease, bar spacing. And with the TradingView, you come up to indicators, and you got several things you can choose from. My scripts, if you make up your own scripts, technical, financial, community scripts, if you want to go in, and you can search. I mean, right now I have a couple of things on here. We're looking at like base candles. Okay. So base candles, new, you can see right there. And what the base candle does for me is it's an indicator on the chart. I have it here. And you can see that every candle where the body is less than 50% of the range is a different color. It just helps me assess the leg base group of candles a little easier, okay? As we are expecting a turn in the equity indexes off the large time frame, we're starting to see a little weakness come in on the dollar. And I'm hoping we see some on the bonds, or the yield, okay? So the fact that we are building, or we're at a reversal here, it's just taken a while to make the turn, okay? Looks like we added on soybean meal, okay? So soybean meal coming back in. Seeing that picture. Great example. Soybean meal, SMZ23. On soybean meal, my second attempt for the breakout trade, the equity or the 10-year yield and the dollar are going in a better light, okay? Or actually they're higher up, so still looking for a pullback. That's going to help with this. Notice this picture though, when you look to the left, I got a circled area and saying POP. POP stands for pocket of points, okay? A pocket of points, okay? We got a light volume drop in price. With that light volume drop in price, okay, there's no speed bump. The speed bump we can see is out a little bit further, okay? Now, a speed bump can be determined by a little bump just above a resistance or below a support area, okay? If the leg base group of candles is a little bit further away, okay, it's almost like seeing a speed bump on the other side of the parking lot, okay? Now, based on the overall structure, most of our touches are in place. We made a higher low before the breakout, okay? Your stop loss is still going to be a little bit bigger even on this time frame with this particular product. So the risk is whatever dollar amount you can handle on that, okay? Finding the leg base group of candles on that, if you realize that risk is too much for your trading plan, then it's quite simple, okay? All you do is say, okay, here's my leg base group of candles down here, okay? In order for this turn to transition, I need the breakout going back up to supply, the pullback back down to demand, and then the move up, okay? This is what we constantly are building, is the same pattern, using the same key pieces of information, okay? This is trading, it's not necessarily investing, okay? Trading and investing go hand in hand, but it's really a determination of the time frame that you're looking at, okay? Investing implies being in trades a little bit much longer time. So an example of that would be like getting in on the S&P here, okay, on a large time frame and just kind of walking away, set and forget, right? And then the smaller time frame would say, hey, you want to minimize your risk on that potential turn, drop it down, get the same picture. It's all the same picture over and over again. Wow, Scott, see what you're missing? You know, that pays for a whole month at $150 a month for these, right? Yeah, great job, Scott. Excellent. Okay, so NASDAQ, okay, back to the small time frame. NASDAQ broke out. We had the speed bumps over there, okay? Now's the opportunity to come back in. We actually had the breakout and the retest, okay? So you should be back into the NASDAQ. Short-term profit right there, 14,979. Breakout, we're anticipating a gap fill. So on this price chart, let's find that gap fill. All right, back up 15,000. How would you like to get in at the bottom? What does that picture look like when we make a fresh accumulation of orders? Okay, potentially that turn coming into the market. Now, we got a lot of obstacles along the way. It's not like it goes little by little. Oh, there was Scott's market order. Thanks, Scott. Shooting up. That's a lot of goat feed. That's right. All right. So yeah, we'll see if we can get the market to help Scott out to do remodel the house. Are you getting more kids or more goats? Well, something must be coming out. Is there news that it's coming out? Oh, Taylor Swift Eras tour uh, broke records for Cinemark. Okay, well that's good. Good old Taylor. All right. How's things looking? Yeah, Russell's being slow. Okay, it's not a big number. S&P's still doing okay. What we got? Oh, we got to add one more. We got six. So we had a soybean meal, SMZ23. All right, no tomatoes yet. Okay. Nat gas did get the breakout earlier. Crude oil, we had that, I missed that one, that short trade, and now it is climbing back up. Let's keep an eye on crude oil. Let's go out to the larger time frame. We did have a support area here. Yesterday we took the breakout to the downside, okay? And in doing so, taking that breakout to the downside, okay? Boom. Okay. And we have the resistance area. Yeah, Stephanie, I can't wait till we get up and running and have our accounts funded and just have the team, have somebody in the team just taking all the trades that we're in, same size, same position, and such. That way I can go on with the show and not worry about the trading, just come back and look at all the open trades and say, yeah, we're doing okay today. Or maybe I need to let Brian do the trading, huh? There we go. All right, back to crude oil. Oh, thank you, Miss Chris. You know, I can't wait to get that information back. You know, last 2 weeks as you've been out, and rightfully so. You've been working so hard on that. You were a big topic of discussion. You know how much we appreciated you and all you do with those reports and posting in the Discord room. Some of us had to go back in a few weeks and find the information to regurgitate it, and so we missed you and glad you're back. And for those that don't know, Miss Chris, she posts in the Discord room what she sees as far as the API and the EIA reports coming out on crude oil and other reports on natural gas. See, the API and the EIA report for crude oil and oil products, natural gas and things like that, okay, those reports are released 24 hours, well, in advance before the actual numbers come out that everybody hinges on. By taking that information, okay, and I think it was the EIA report comes out after market close, about 15 minutes to a half hour after the regular session close, and it tells you what the oil report's going to be, or what their forecast is going to be going forward, okay? Because it's last week's numbers, they already have it. So they publish it. Now, the public hangs on this crude oil report that they release to everybody, but see, that report comes out at 10:30 the following day. So using the reports, you can get an anticipation, are the inventories high, the inventories low, are we looking at big discrepancies? And then we could look for, okay, well, they're going to find the buyers up here if there's a lack of buyers down below and sellers up above. And we use the leg-based group of candles around these areas. And it's quite amazing. Now, we do have to get that format to where you guys can communicate when we're doing this, because the Mastering the Charts review and recap, I do like to hear your feedback, not just do the Jeff show here, especially when we're working together. All right. How many are in some of these trades? Can you guys... We do need goat shepherds. You can apply on the website. Yeah, on the website out here. And please, everybody go out, and I just want to keep reiterating, go out to the marketinstitution.com. Start kicking around. There's a lot more things that we're doing. There'll be a lot more graphics, a lot of cool things coming up. The schedule is still being populated with everything. And, give us to the end of the week to get a few of these things in place. If you have any troubles at all, you have to contact us. Just fill it out. Tell us your message, and we'll be glad to help you with everything that we can. Okay, we're still working out the bugs for the transition. That was a little early. Okay, and you'll have a personalized area where all your courses that you've purchased will be listed in here. You can separate them, events that you want to be reminded of, your subscriptions, okay? Some really good stuff coming out. It's an amazing website, and these folks have done an amazing job of putting everything together. So we're still building it out. We weren't anticipating the transition so quickly, okay? But we'll roll with the punches and make the students first in everything that we do. I don't know, Guy. Are you in the room, or are you still in the Discord? Somebody can handle Guy in there. Cool. All right. Still a little bumpy ride. Speed bumps are really bumpy. Yeah, we see that that buy territory is pretty strong. Here they come, coming around the far outside. Let's get a good move now. So BKX is above. It's on the right side of the fence to be long. Okay. Now, as long as it stays above the moving average, okay, we're leaning more bullish on the equity indexes, or on, yeah, basically the equity indexes in whole. Okay. Because we use the BKX the way that the NASDAQ exchange uses it, and that's to gauge risk. Okay. The NASDAQ index bought this indicator or index from, I think, CME. Okay. And don't quote me on that. You can go in and find it. But they bought this index so that they could have it on their website. They use it to gauge risk when the banks are coming in and when the banks are going out, as far as that inflow and outflow of capital. This index is based off of 24 regional banks and national banks, okay? So they want to see if that money coming in like a tide and coming back out, okay? On an intraday basis, we can use this piece of information to see when trends are being established that the banks are putting more money into the market, or if it's still just chopping around, okay? Above the moving average has been more bullish, okay? Below the moving average, more bearish. And we're just using it as a gauge. It does not make a trade. It just helps us assess which direction should I be trading in. See, if I was short right now on the NASDAQ and the bank index is above, okay, I would be saying, hey, I'm on the wrong side of the fence at this point, okay? And right now, they're straddling the fence, and that's not a comfortable position either, okay? But at any rate, we have our stops in place. We allow the market to do what it's doing. All indications right now are that there's a fresh accumulation of orders being built, and we're seeing that picture take place. Okay, so let's come back out here a little bit. Our pre-market prep identified all these zones, and we have taken trades in each one of those. I do want to remind everybody that the Jewish holiday is this week, okay? So the market conditions, this happens every year around this time. Markets can be range bound, but they can have some wide ranges. I do anticipate this level to be tested again next week as they come back to unwind the hedge, okay? But right now we're getting that first move up potentially to fill the gap, okay? And then coming back down to make that double bottom and actually make a bigger picture for a potential change in trend going into earnings season and then the next quarter, okay? These were some of the trade setups. This is something new that we're putting out there. I'm going to try to do more than just 4 of these, but I had a lot on my plate this morning putting together some of this, all the studio stuff and getting acclimated to things, okay? But these are going to be educational trading ideas. Team, we do need to put a disclosure at the bottom here. These are just educational trading ideas. Take the trade, it's at your own risk type thing. So entry on gold, we did have the nat gas. That one did play out, okay? And we got the breakout, okay? That follow through. We also had that entry early in the pre-market. Now, had a great setup, and I still take bragging rights for the setup, but I didn't get into the trade. And I didn't even get into the breakout because of things I was distracted with, okay? Gold is coming back into play. As we look at the daily chart on gold, it is in a daily zone, okay? We took the time and went down to the small time frame like we have been doing on the S&P and the NASDAQ, really exploiting that as part of the lessons that we're putting together here. Okay, drop down to a 20-minute chart to start seeing when we're building a fresh accumulation of orders. Okay, so as we're building this, with the announcement, we got we got stopped out the first time because of the way that gold behaves around those announcements. Okay, but we have a new high point. We're looking to find a resistance level that has been tested minimum 3 times. Okay, this lower fractal pattern, it did have to break out and it did pull back, and we, on a, I think, really small time frame or even a tick chart, we did have the resistance. It's the same pattern, okay? But since it broke out and came back down into the leg base, it's already used. So what we are building now is that potential new buy territory on a small time frame inside the zone for the daily chart. Okay, so next entry on gold, and if you want to get that earlier turn, wait for the leg base group of candles to form. Recognize you have a speed bump, so you're going to have to let it test the speed bump on the breakout first. Okay, and then wait for the zone entry if that fits into your trading plan. Okay. Let's see. So, some things that are, when we're talking about down days in a row, let's see, we have 1, 2, 3, 4, 5, 6, and today is 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Today's 7. Okay. Now, very often, when we have 7 down days, we'll get the 8. Okay, but that doesn't mean it have to be a big down day. Okay, we're in a large time frame zone, and we may have like a doji candle or something like that. Okay, we are getting in on a small time frame so we can manage risk. Okay, but there still may be another down day in here. It doesn't have to be big, because right now the color of the daily candle is also red. Okay, so it could be another red day, not taking out that low or taking out the stop. Okay, but something is manufacturing a potential turn on gold, and I want to give it a shot intraday, and maybe tomorrow still look at this same area for that breakout above 1849.5. As price breaks back into the dead space is an area between resistance and support, okay, that has been used up. All those orders have been filled in that range. We would anticipate the opposing zone back up near the highs. If you have your Stock Traders Almanac, or if you are part of the MRCI.com website, okay, and you use that information that MRCI puts out, look what happens to the metals historically, okay? Wow, a lot of bouncing around. Another point that I would like to make is that major turns in the market, especially after a down move, it takes a little bit of time for price to manufacture a new move back up. After all, as we're looking at the chart, and maybe this is a better way to explain it, that we have an impulse and a correction. Impulse and correction. Now, we are getting long in a demand zone, but during that correction phase, okay? So the volatility can be there. And if you have the personality where you are exceptionally good at trading that volatility in the correction move, fantastic. Okay. If you're better at taking trending trades, fantastic. Okay. But learn what your personality is. What are you more successful at? If you're more successful in the choppy markets, then form your trading plan around that. It often occurs after an impulse wave. Then you have correction. After correction, we have another impulse. And after the other impulse, we have another correction. Okay, so it's always going expansion, contraction, expansion, contraction. Okay, so by having a good understanding of what an impulse and correction is, you can manage expectations around how you are going to take trades. Okay? So more to come on these. We did have some other trades that we were looking at. Let's go out and take a look and see how they've been performing. Okay. We had a NASDAQ zone. Okay. Price did come back into a larger time frame, 60-minute zone. And so far it's still working. Russell, 20-minute time frame. Price came back down to a zone. That one's still working. Okay, of course the nat gas that we've already pointed out, that one worked. We are currently in gold. It is taking its sweet time, and we like to have them move fast and show profits quickly, but there we go. Man, 10-year and 5-year still going lower. Okay, there are no more zones down here that I have data for. Okay, I had to go back 12 years to find this information. Okay, so what we're looking for is we need to build a fresh accumulation of orders on a smaller time frame on the bonds and notes before we start to participate. The crude oil opposing sell, and you can go and do your own research on this one. Find the leg base on a smaller time frame. I'll give you the range, 91.25, 91.44. We have a supply zone in the sell territory. Okay? Well, bonds keep going lower. Let's take a quick look over here. Oof, look at this. All right. We just recognize bonds keep going lower. I immediately went out and looked at the yield, and it's going higher. Then we're looking at the dollar, still chopping sideways. This is not good for our long positions. Okay, so what this implies now is that our long trades that we had here, you got to adjust a little bit for your risk. Okay, it's kind of like you're driving down the road and you just now started to see some potholes. You started to see some things changing there. Okay, the road conditions are changing. You're going from a nice smooth highway to a dirt road. Okay, so things are going to get bumpy. Now, if things are going to get bumpy, can you start taking profits on some of your positions? Maybe downsize, okay? Or pocket the money and do the happy dance, okay? So looking at the charts, S&P, okay, as I look up, looks like we have more touches here, okay? So we have another level of resistance. We're seeing that there's some sell tickets at that area. So the next breakout on the S&P would be above 42.78. Take the money and run. And that's okay, okay? This is not based off of my trading plan. It's based off of how you feel. If the money's good and you like it, then take it. Okay? If you want to reduce your size and say, well, let me take one off and see if the other one runs, manage your risk accordingly. Okay? All I'm simply pointing out is that the BKX has just been straddling the fence right here. There's no clear direction that this chop is over. The one-day volatility index is on the bearish side of things, so there could be a pullback. I could be giving back some of my profits. Now, I'm not making an opinion, okay? I'm looking at my gauges outside the price chart to determine what's going on there. I can see that the road is getting a little more bumpy for my long position because the BKX is not trending up or not trending down, it's just going sideways. Okay? On the higher time frame, I understand that this is a correction phase and that it's going to be choppy. I would also point out, okay, is that impulse waves, okay, if you take that impulse wave, you see that that impulse wave took very little time while a corrective move takes a long time. Here's another good example. Impulse, correction, okay? Every time we have that impulse, we have that correction. Correction phases often last 3 times or 2 to 3 times, even longer than the impulse, okay? So what we have to determine is, are they building a fresh accumulation of buy orders or sell orders down here, okay? Or is this correction phase just basing to continue lower? See, we'll see that on the picture, on the price chart, especially if we start seeing that we have 3 touches of support where all the buyers kept coming in, 3 touches of resistance, okay? Then we wait for the breakout down or the breakout up. It'll either be a drop-based drop or it's going to be a drop-based rally. But anyways, the correction is, or the base is that correction phase, okay? And we need to, let that sit. Now, if you start mapping out, okay, correction, and then we have a impulse, correction, impulse, no correction, just reversal. Those are also key places to look for resistance areas, okay? Price going back up, okay, especially on these equity indexes. We're forming a fresh accumulation of orders below that support, okay? We see that there's resistance and support here, and in between that area would be the dead space. Now, why is this important? When price gets into that dead space where all those orders have been filled, it easily goes right through it. We saw a great example on that. Somebody pointed out, look at soybean meal, rocking on the Japanese yen. So the Japanese yen this morning had a pretty violent move, okay? And we see that we had a fresh accumulation of orders being built below the support. Price broke back into that dead space and shot right through it because all the orders were filled up here. Okay? Now, when you look to the left over here, and this is also important, okay? The first thing that's important is that you could see where and how much, where the extreme moves are for this particular product by these reaction candles here, okay, to news or economic events and things like that. That reaction price also went back up into a leg base group of candles. So not only did we see the visual of how the dead space works, okay, and what to expect when price goes through a dead space, and it's a continued move up. It's not always that fast, okay? But price easily cuts through that. A lot of sell orders may be on the other side of that dead space, but inside the dead space, we only take breakout trades, okay? Using the information on the left-hand side of the chart is really going to help with a lot of this in evaluating how to stay in a trade longer. Let's come back to soybean meal as we're showing a little profit on this. I'm going to drop back down to the smaller time frame. Did anybody take this trade, by the way? I got about 3 minutes left of this session, and then I'll jump back over to the Discord room. And it's getting very late for my team over in Jakarta, so it's been a good couple of sessions, but they need their rest as well. This breakout trade here, okay, had a pocket of points. Very little resistance. So a pocket of points, it is basically the same. It's a goat flag. Gotta love it. Oh, Janet's in it? Well, what are you doing, Ron? You just watching Janet make all the money? Attaboy. The pocket of points is much like a dead space. Now, you can have a dead space where you have area between resistance and support, okay? You can have a pocket of points and or gaps inside that dead space, which give it a much bigger move as well. Oh, okay. Well, I hope everything turns out well, Janet. You're doing good, though. A good day for you. All right. So, pocket of points, no speed bumps, okay? You can get a stronger breakout. S&P still chopping around. Daily chart, I'm anticipating if we're going to move back up, that price is going to look to close above the 200 moving average, which is currently at 307. Volume weighted average price is also another odds enhancer along the way. So we have the 200 simple moving average, which we want to close above it, and that's at 307. Volume weighted average price is at 42.88, okay, just before the approaching the Globex low, okay? And we're anticipating the gap fill, okay? Stage is still set, okay? S&P now, as we see the bigger structure of things, notice that the pivot point in the middle and all three touches are over on, well, most of the touches are on the left. Okay, so I'm going to remove this noise here. And what's unique about what you're learning here at this point is you're seeing the manufacturing of big orders coming in, buying the market, and creating a fresh buying territory. So as I'm drawing this structure out, using resistance as those pivot points, okay, our resistance is qualified by having minimum of 3 touches of resistance, 3 touches of support, okay, and then we look for the breakout. The structures inside the buy territory reveal whether we're going to have a long-running trend or a short-running trend. This one is leading up to having a longer running trend, okay? We are expecting the gap fill. I keep saying that because you're in huge disbelief, okay? I remember when we were first studying the gap fill based on price opening up inside or outside the prior day's trading range. So many of you thought I was smoking something while I was trading, it's like, no way, no way. And then eventually, same day, most often it fills the gap or it fills it by the next morning's session, okay? So we started documenting that over and over again. And it still holds to be true. Hasn't changed yet. The BKX is back on the right side of the fence, and we need the VIX, one-day volatility VIX index, to get below the moving average to be on a good side of the fence, okay, for the market to move higher. Right now, it's still working on that. Not in a full-fledged uptrend. We're still in that correction phase. All right. Yeah, got the shrooms. Okay, a lot of good things covered today, a lot of details. The reason the Mastering the Charts review and recap sessions are so important is to get that extra little information. During the Mastering the Charts course, you will learn how to do the structures, patterns, and train the eyes to see the patterns that we see and are using and creating. And we will verify that information and give you a lot of training techniques to accelerate the way your eyes are trained to see the price chart, okay? And understand why price changes direction and so on, okay? That foundational course is very important. The follow-up course, which is this, the Mastering the Charts Review and Recap, okay? A follow-up to that session in order to support and bring in additional information, such as looking at the smallest time frame to anticipate, well, should I get into this prep screen zone? Well, sure, drop it down to a small time frame and look for that picture, okay? Anytime you make that lower low, you look up and find your resistance or your support, and then you map that out. See, once we break above the 4282, okay, we got pockets of points up here. We got light volume overnight session, okay? Not so much a dead space in there, but we have light volume overnight session, okay, where price could really start moving, okay? You just have to find a way to get into that trade where you manage the risk based on your trading plan. All right? All right, let me just double check the Discord. Everybody's good. How did you guys enjoy the session today? No tomatoes in our salad, as Chris would say. All right, NQ's doing good. Yeah, a lot of things to learn. Did you guys make some money today? Anybody make trades? Yeah, I know. I got to give you. We'll work on that, Chris. Right now, the automation part is what is necessary for this. Thank you, Miss Chris. You have been missed so much. But we'll be back. I'll be back in the Discord room in a moment, so it'll be good. Yeah, tossed salad. We're just doing Caesar salads today, Chris. No tomatoes. All right, I'm going to wrap up this session so my team can rest, and I want you guys to recognize that none of this is possible without the team behind me putting these things and doing all these things. So you have a new team, a new support team. Let them know that you appreciate them, and as much as I do, they've been amazing putting all this stuff together, okay? And this room powder too, Chris, yeah. All right, everybody, let's wrap up this session. I'll be over in the Discord room where we can have our community channel in there as we kind of watch some of the trades play out. Have a wonderful rest of the day, everybody. We'll see you tomorrow, same time, same way, and hopefully I'll be a lot better on the Zoom session or this session here, so a little less clunky. Have a good day, everybody, and thanks again, team.